You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
All right, everybody. That music means we are back once again for This Week in Futures Options, the program where the name pretty much says it all. We're going to break down the week that was and indeed still is over there on the futures options side of the fence. So we're going to talk some ags, maybe some rates, some metals, some energy, some equities. You never know what's going to make it on the show. That's why you have to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. If I sound a wee bit different, because I'm coming at you from the Southern studio. Got the heck out of Dodge for the first time in nearly a year, not in Chicago right now, so running things a little bit differently this week. Of course, you guys can get access to all this good stuff and a whole bunch more. The live shows, the exclusive shows, everything else, the giveaways, theoptionsinsider.com/secret club. Remember, just a secret, just me and you talking here. Don't tell anybody. And of course, if you listen on demand, all we ask, if you like what you hear, keep rating and reviewing. You can do it, of course, in the TWIFO feed. You could do it on our main network feed. You can do it where you get our app. Wherever you get the content, leave a nice review if you do like the content. We do love to hear from you folks, and also does help all the new folks continue to discover the program. As we keep on rolling, going to be a Just the Facts edition of TWIFO this week, listeners. Going to dive in, hit you with the facts, and dive right back out again. But first, we have to kick off the show the way we want to do. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. And, I love all of our guests that join us in the CME and FTSE hot seat because they bring welcome perspective to the show and expertise across a broad array of products. But I also like when we don't have a hot seat guest, because that means I get to choose where we start the show. And this week, listeners, you know the deal. we're going dark side. By the way, if you want to see this report for yourselves, just follow CME Group really on Twitter. That's probably the easiest way to get it. You can also give us a follow at Options if you aren't doing so already. We always tweet it out before showtime as well. If you did so this week, you would see that it actually is a little bit heavier to the upside this week, which is kind of interesting. We'll get to all that in a little bit, but we're starting dark side, listeners, the way we are wont to do here. Let's go out to number 5 to the dark side this week. It's the 30-year off 1.67%. Number 4, don't see this name in our movers and shakers too often. The E-mini NASDAQ 100. You have to head out there this week just to mix it up. Off 3 1/3%. Does some paper. It has about 91,000 contracts on the tape coming into showtime, so we could certainly sink our teeth in out there. Number 3, back to the rates. Ultra 30-year off 3.5% this week. It was number 5 in the same direction last week. Off 4.62%. Out there. And again, before you get all worked up, 133 contracts on the tape right now in the Ultra 30 year. So I don't think we'll be sinking our teeth into the Ultra 30 year today. Now, the flip side of that, from a volume perspective, number 2, the Eurodollar is off 3.69%. You don't need me to tell you the Eurodollar does some paper. So yeah, a lot of action out there. Number 1 this week, again, how many times have I said it, listeners? The 3 frequent offenders. You guess one of these, nat gas, Bitcoin, or lumber. You have a good chance of being right just about every week. This week, you would have been right with Bitcoin off 6.78% this week. It was number 4 in the same direction last week, off 4.94%. And again, it's just watching it moving in lockstep with the equities these days is a bit of an interesting, perhaps disconcerting thing if you're one of these folks out there who likes your crypto a little bit more disassociated from your other investments. But c'est la vie, that's where we're hanging out this week. And again, not exactly a blow the doors off type of week for the regular full-size Bitcoin options. Only 163 contracts on the tape this week. Still waiting for all that micro stuff to propagate through all the quick strike platforms so we can really sink our teeth into them, look at the skew, look at the volume and everything else. So can't look at those yet this week either, which we'll get there. Don't worry, listeners. They're brand new contracts, only listed a couple of weeks ago. Let's get on out to the light side now, which is where the preponderance of the action was this week, listeners. And there's probably a couple categories you may have guessed for the upside this week. Maybe one sneaking in there, maybe you didn't guess. But if you guessed ags and energy, you're looking pretty good this week. Did you guess metals as well? We'll get there. Number 5 to the upside this week, SRW wheat, a.k.a. Chicago wheat, a.k.a. soft red winter wheat, up 8.6% this week. It was number 5 in the same direction last week. So the exact same spot last week, listeners. It was up 2.14%. And again, as we talked last week, that can do some paper, over 50,000 contracts. So we'll probably sink our teeth in out there. Number 4, KC wheat, up 9.08% this week. It was number 2 in the same direction last week, up 4.59%. A lot less paper out there, only about 10 to 13,000 contracts on the tape out there. So probably, if we're going to look at the wheat, you're probably going to hang out in the SRW wheat. Number 3, palladium, metal sneaking in there. Palladium's been on this crazy ride of late, rally. And then in the last few weeks, it was coming off. Now popping back up to the upside, up 12.48%. So we got some movers to the upside this week, listeners. Again, before you get all hot and bothered, 21 contracts on the tape this week in palladium. So no joy to be found out there for us in palladium this week. Number 2, you probably, again, this is one of our frequent offenders. You guess this one every week. You're looking pretty good right now. This week coming in at number 2, it is nat gas, up 13.26%. It was number 1 in the same direction last week, even though it was up less. It was up 9.11% last week. This week, number 2, up 13.25%. What's going on in nat gas? Yeah, we'll get there. Don't worry, listeners. And number 1 this week, once again, big percent mover. Not a huge options player, but a big percent mover. Heating oil, up 15.3%. It was number 1 in the other direction last week, off 10.16%. So quite a wild couple of weeks for heating oil. Again, before you get yourself in a tizzy, there's some paper. We could look out there, 1,700 contracts. So maybe if we're squeezing, we can look at a few things. I think the biggest print we saw out there, most active contract, was 340 contracts. So not a ton, but we could maybe sink our teeth into heating oil. We shall see. Now it is time for us to keep on rolling, though. Given all this action, listeners, you know where we have to start. It is time to look into the energy
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the Energy. Looking at our live chat scene, we asked them what complexes they want us to talk about on the show. We got votes for equities and nat gas. So, Option God, you will be happy here because nat gas is up first on the docket. Again, one of our frequent offenders out here in the energy complex. You guys know where to go by now. CMEgroup.com/TWIFO, TWIFO. That gets you to our TWIFO This Week in Futures Options reports. From there, you're going to want to choose your asset class out there. So you're going to go down 3 notches to energy. Then you're going to go over to product family. You're going to go down 3 again to natural gas. Then choose the top product there for nat gas. There's 3 in there. And that's where we're going to hang out right now. Nat gas, again, we were talking not too long ago. We were saying, man, there's a lot of action on the 7 strike all the way out to October and then even beyond recently until the end of the year. That was a little bit disconcerting because that's a pretty aggressive level for nat gas. And now we're seeing that level has come to fruition. We are at about a 729 kicking off the show, listeners. So we're looking at levels in nat gas right now that we pretty much have not seen in quite some time out here, listeners. Yeah, we're looking at nat gas levels. Pretty much 2008 is like the last time we really were threatening levels along above this $7 level here. So we're looking at pretty aggressive levels out here right now. A lot of people are starting to pick up on this fact. We were just talking about it on the option block earlier on the network, listeners. It does seem that people who were wondering, in fact, we had a poll about this not too long ago on the network. In fact, the day of the invasion, we polled you folks and we asked, hey, what do you think in terms of the duration of the impact on the markets from this event? Is it going to be a few weeks, a few months, or a few days, I should say, a few days, a few weeks, a few months, or a few years? And I think 42% of you were in the few weeks, and we had 30-odd% in a few days. So talking over 70% of you said it was going to be a few weeks to a few days. Unfortunately, the longer term seems like that is where things are going. And one of the best examples of that right now is the term structure in natural gas, where we are seeing just $7 pretty much across the board in a lot of these contracts out here. In fact, if you go all the way out to, January and February of 2024, listeners. So not even next winter, talking the winter after that. You're still talking those futures above $5. So this term structure is pricing in that we have a lot of difficult times ahead of us from a nat gas perspective. And again, a lot of this is coming from this transition we're seeing in Europe right now. A lot of them very dependent on gas and oil coming out of Russia, and they're trying to change that, also trying to move away from coal in certain parts of the world. So all that's putting upward pressure on our LNG here in the U.S., and hence what used to be a very siloed market. Remember, if they couldn't ship it nearby on a pipeline or on a tanker or on a truck, they would just burn it off. Nat gas hung around $3, $3.30 forever. And then all of a sudden we're seeing this, this $7 range. This is not quite unprecedented because obviously we were here back in 2008 as well. But this is serious upside to contend with, listeners. Right now, let's see how much paper is on the tape in nat gas this week. There is almost 600,000, 578,000 contracts. That's a lot of paper for nat gas. Usually on a busy week, we'll see 400, 450, somewhere along those lines. So seeing close to 600,000, that's a lot of paper on the tape. The most active contract is the May contract that has 12 days to go. It's slightly within our frame of reference. I like to go out 14 days, but we'll make an exception here because that's where 33% of the paper, so pretty much exactly a third, is going up this week. Let's see, the vol out here on this 12-day to go contract, about 64.5. We go a little bit farther out. We go to June or July contracts. Those are in the 70s, 73.5 and 75.5. So talking some serious vol. Nat gas not too long ago was in triple digits very briefly, so it can get up there, and it looks like it's starting to threaten those levels again. In terms of skew, we are seeing last week the puts 3.2% cheap. This week the puts 7.7% cheap. Puts getting cheaper. Calls kind of hanging out a little bit more bid this week. Calls last week, 6% bid. This week, 6.7% bid. But remember, as you go north, the skew usually should come in a lot of these names, unless you have aggressive bids to the calls, which we have had out here. So the fact that these calls are staying even to gaining a little bit of a bid shows there is still a lot of interest in these calls out here. And speaking of the interest in the calls, it was the 7 calls that were leading the dance this week, listeners, with 25,000 contracts on the tape. And of that, pretty active all week long. 8,200 on Tuesday was the big day, slightly closing there. 7,000 yesterday, almost 8,000 again today. 2,000 on Monday. So a lot of back and forth on this 7 strike as we threatened it, moved away from it, as we broke through it. A lot of action on this 7 strike, which again, that is a pretty psychologically significant level. Not surprising we're seeing a lot of action there. Also seeing the 8 calls. Pretty much almost the exact same level. 25,300 of these going up this week. So action on the 8 calls as well. The big day today, 13,000 exactly on the tape today. 7,500 yesterday, 3,000 on Tuesday, 1,700 on Monday. Again, back and forth, opening to closing. So no big bias there one way or the other. A lot of action on the 8 calls as well. That kind of just shows where we are right now in Nat Gas, listeners. And behind it, it wasn't all calls all the time. The 6 puts doing 14,000 contracts pretty much exactly this week. The big day again today. 5,300 on the tape today, 3,500 on Tuesday, 2,500 each Monday and Wednesday. It looks like those were mostly opening throughout the week. So perhaps some folks looking at a near-term fade here for Nat Gas, or perhaps trying to harvest a little bit of the old risk premium. Either way, a fair amount of action going up on these 6 puts. I like to scroll a little bit farther out, listeners, too, when we're looking at Nat Gas, because, as we said, the futures are pretty lofty. And if you're looking for a resolution to this conflict, or to see these energy prices come back down to earth sometime in the near future, maybe this term structure is not going to hold a lot of good information for you. We have the 10 calls trading in June pretty actively. Yes, a 10 handle calls, listeners. To think about that, we were trading 3 or below not too long ago, and now we're talking about a 10s. The 7s seemed crazy not too long ago, listeners. The 10 calls doing 10,200 contracts, 5,100, so pretty much exactly half going up today. 2,400 on Wednesday, about 2,400 on Tuesday as well. So a lot of action on the 10s here in June this week. And if that's not, shall we say, outlandish enough for you listeners, the 15 calls in September also active this week, 5,300 times. Looks like we have a 15-14 vertical going up. 5,300 times, unless there's a lot of strange. All these strikes were active on Tuesday, listeners. The 15s, the 14s, the 10s, the 12s, the 13s, and the 8s were all printing on Tuesday, and all in wildly different ratios. So kind of hard to tell if there were flies afoot or what was going on. Potentially someone rolled the 8, 12, 13, 1,500 by 3,000 by 3,500 times, and then did the 10, 14, 15, 2,200 by 5,300 times. Again, those numbers don't make a heck of a lot of sense, but it is worth noting that a lot of strikes were active on Tuesday, not just the 15s and the 14s, even though those are the ones that leap off the page. Those were also both opening. So someone opening 5,000 each of the 15 and 14 calls this week out here in September. 15 handle in Nat Gas by September, listeners. That's that's looking pretty dire for not just the Nat Gas market, but for society as a whole, listeners. What do you think has to happen to hit those 15 levels by then? And again, everyone who's hoping maybe next winter, a year from now, getting into January, February, March of next year, things going to be looking a little bit better. Those futures are all trading north of $7 right now, 785, 762 for the Feb. The March next year, 673. They're all trading at a 75 to 80 vol. It's not looking good for the beers right now, listeners. What are your thoughts here on Nat Gas? How are you playing it? Are you playing it in the Nat Gas options? Are you looking perhaps at some of these Nat Gas names, the stocks that have been popping of late? We were joking not too long ago on our oddity show about names like Tellurian. Seems like they were kind of languishing for a bit, but now catching a bid out there. Either way, just a crazy stuff afoot out here, listeners. I wish I had better news for all you folks who were hoping for perhaps a bit of a return to some semblance of normalcy out here in the realm of nat gas and energy. Doesn't seem like we're going to get there anytime soon. And since we're hanging out in energy, let's look really quickly. We've never really looked at this product before. We've done WTI many times. Heating oil is moving quite a bit. Again, doesn't do as much paper as the others, but we can parse it. There is enough options flow as it is to parse. So pop out of nat gas, go down to the refined products list. That's where we're going to find heating oil. Then pop into heating oil. Again, 1,700 contracts on the tape, so not blowing the doors off. Right now, heating oil at a 3.87, listeners, if you're wondering out there in that front future that has 12 days to go, that May future. The vol in heating oil right now, 68 and a quarter. Let's see, the skew this week, 10.6% cheap were the puts. Last week, 5.6. So the puts getting cheaper. The calls last week, 5% rich. This week, 7.2. So the calls getting bid up, puts getting cheaper. And most of that action of that 1,700 contracts, the biggest trade was the most active contract, I should say, was the 340 puts going away in about 12 days. They did 400 contracts this week, 200 yesterday, 200 today. Looks like most of that opening. Also seeing the 330s and the 310 puts. So a lot of puts active in heating oil this week. Maybe some folks thinking we are overdue for a bit of a retracement out here. Again, kind of hard to read too much into the tea leaves of 1,700 contracts, but that is what the heating oil paper is telling us. So for all you folks out there who've been asking, what's up with heating oil? There you go. There's your quick overview. But you know, the ags are also lighting it up to the upside, listeners. So let's head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the ags. You guys know where to find this by now. Go to that drop down, go pop out of energy, go all the way up to the top of the asset class list. Go to agriculture, click on into the grains and oil seeds, and then go down one slot to the SRWE. That is where we're hanging out this week. Doing a little bit more paper. Had 53,000 contracts last week, 78,000 this week. So a little bit more paper out there in Chicago wheat, a.k.a. SRW wheat. Coming into showtime, it was at a 10.95. Remember, we saw just insane levels for wheat not too long ago in the early days of the invasion, as we saw Russian tanks sweeping through the breadbasket of Ukraine. A lot of worries about the current harvest, about future harvests, about destroying the soil, everything else. So a lot that conspired to drive wheat to record levels. We had Carly Gunner on the show not too long ago saying, if you weren't in wheat, be thankful, because it was pretty much lock limit every day. So your futures, which were your hedge in many cases, can only move so much a day. Meanwhile, the options were still open, and they were super wide and printing all kinds of crazy levels. So kind of a bit of a nightmare scenario, especially for newcomers who are maybe a little bit newer to these markets. So, yeah, interesting stuff out there. Wheat still obviously very frothy, up another over 4% since it started this week, or 43 handles, again, at a 10.95 in that front May contract that has 8 days to go. How much paper? I said 78,000 contracts on the tape this week, fully a third of it. This is like an equity, fully a third in the contract that has 8 days to go. Let's go a little bit farther out, though, listeners. Let's go out to July, because that also did a third of the paper, 32.9% to be precise. That has 71 days to go. That future's at 11.03, so a little bit frothier, a little bit juicier than that front contract. What is the vol out here in wheat? That front contract going away in 8 days is at a 38 and a third. Going out to July, it's at a 41 and a half, so a little bit more vol out there. Let's see. In terms of the skew, last week the puts in July, 4.6% cheap. This week, 5.4% cheap, so the puts getting cheaper. The calls last week, 9.7, so almost 10% bid over that 41 vol level. That's a pretty decent vol level for wheat. This week, those calls coming in a little bit, 6.9% rich this week. In terms of the most active contract, we have to go out to July. That's where we find the 900 puts. As I said, we're hanging out at about a 10.95 in that front future. If we go out to July, we're at 11.03. And it was the 900 puts in July that were the most active contract this week, with about 3,000 contracts on the tape. The big day was Tuesday, about half of that, about 1,500 going up there, most of that opening, followed by about 1,000 on Wednesday, 600 and change today, not much on Monday. So action on the 900 puts. Right behind it, though, we have the 1,200 calls going away in 8 days, doing about 3,000 contracts as well, 2,955 to be precise. Also, Tuesday was a big day for them, almost half, 1,412 going up on Tuesday, slightly biased towards opening, followed by today and Monday, both at 564, so tying today and Monday, which is kind of interesting, 400 and change on Wednesday. So 1,200 calls going out in 8 days, and then the 900 puts going out in July, kind of number one and number two out here in wheat. But unlike, wheat and the ags tend to follow a certain seasonal cycle to their paper, listeners. They'll go with the harvesting and the planting, and that's usually where we see the lion's share of the paper. But we are seeing some interesting things popping up out here. For example, going beyond the July contract, we have September doing almost 11% of the paper, including the 1,300 calls, trading 2,300 times this week in September. That's 1,300. That's back to the levels we saw in those dire moments of the early part of the invasion. Looks like that was mostly on Tuesday, 2,000 of them going up on Tuesday. And most of that opening also saw that same day the 1,700 calls trading 1,500 times. So that was pretty much all opening on the 1,700. So perhaps a bit of a vertical there, 1,300, 1,700. Again, nothing's one-to-one or even really that close. So it's kind of hard to analyze the spread paper out here. But intriguing stuff here. 1,300's opening up 2,300 contracts this week. So 1,300 back again in wheat, perhaps by September. At least that's what this trader is looking at. At least there'll be some action out there, whether he's buying or selling those. I'll have to dig in a little bit more to find out. Also saw the 1,200s pretty active in Dees, going up 1,100 times this week. So any of you who are betting against more upside activity for the near future may perhaps, at least looking at some of this paper, may perhaps be a little bit disappointed out here. But it's never disappointing. It's the equities. So let's get to them.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities. You guys know where to dance by now. Go out of that drop down, move down 4 slots, or really 3 slots from the ag asset class. Go out into the U.S. Index E-mini. We're going to hang out in the NASDAQ first. As I mentioned, the NASDAQ 100 in our upside movers and shakers this week. So we don't get a chance to sink our teeth in out there. Kind of fun to do that right now. Right now, NASDAQ leading the charge to the dark side today in today's equity sell-off. NASDAQ usually tends to lead the charge these days, so intriguing stuff. Right now, almost 100,000 contracts on the tape, 99,000 and change. The NASDAQ at a 1410 as we're kicking off this segment. Off a whopping 316 points or 2.25% just this week, just since Monday. So a rough week out here for the tech-heavy NASDAQ. And I said, of that, about 100,000 contracts. It is an equity, so fully a third is going out in a few minutes here. The contract that goes away a little bit later today. Let's go, obviously, a little bit farther out. Let's see if we can find another meaty contract. And the NASDAQ is pretty evenly split, 7%, 7%. All the way out to June, listeners, to find a contract that's done nearly 20%. That's the June contract right now. So we're going to hang out there, listeners. If you're wondering, what is the vol in June in NASDAQ? About 26 and a third. Actually, speaking of vol, before I do that, let's set the table here from an equities vol perspective. Coming into the start of the segment, we have RVX. So the VIX of the Russell 2000, 2810. It's up about 0.85 from where it was this time last week. VIX cash was a little bit shy of 23, about a 2280, puts it up 2.8, almost 2.9 points from where it was this time last week. VVIX at about 115.5, that's up about 5.5 handles from this time last week. VolQ, 26 and a third, up about 2.7, almost 3 points from last week. That puts that VIX to RVX spread at about 5 and a third, so that small cap to large cap vol spread. That's about 2 points tighter than it was this time last week. And the VIX to VolQ, so the NASDAQ to VIX vol spread, or NASDAQ, I should say, the S&P 500 vol spread, at about 3.5 points, about 0.2 of a point tighter from what it was this time last week. All right, all that table setting out of the way, listeners. Let's dive into the June contract here in NASDAQ, because that was leading the dance with about 19% of the paper this week. Vol 26 and a third, up about half a point from Monday's session. Skew-wise, you know the deal in equities. The puts are always bid, and that's pretty much the case last week and the case this week. Last week, the puts were 20.2% bid to the at-the-money. This week, 20% even. So they've changed a little bit, but not much this week. The calls last week, 15.2% cheap. This week, 16.6% cheap. So no love for the calls. Puts staying about where they were. In terms of the most active contract out here in the NASDAQ, if you said the 15,700 calls, what a ridiculous strike. But yes, if you said the 15,700 calls in the NASDAQ 100, you are the winner chicken dinner, trading 1,200 contracts on Monday, 500 on Tuesday, 600 yesterday, about 100 today, almost 2,500 trading on the week. That is the big dog out here. That is, I'm looking for spread action, listeners. The 15,000's traded a little bit, but only 400 total all week, so nowhere near enough for a spread. That's just straight up opening paper on the 15,700 calls, listeners. That is not the strike I imagined. Again, we're at about a 14,000 almost exactly, listeners. 15,700. What are your thoughts on those levels out here in NASDAQ? Someone's looking to play out here, I should say, at those levels this week. Let's go a little bit closer to home to the 14,000 puts that are going away in a few minutes, also doing about 2,400 contracts this week, listeners. The big day for those was Tuesday with about 800, 700 on Monday, and about 500 yesterday and today, respectively. Pretty much closing all week, so maybe someone thought we would break through that 14,000 level a little bit sooner than we did, or threaten it, and then bounce off of it. Either way, from folks coming in here to take off a lot of 14,000 put paper here in the NASDAQ this week. So yeah, I don't get a chance to sink our teeth into the NASDAQ 100 too often here on the show. And before we roll on out of equities, take a quick stop. It is the FTSE Russell hot seat after all, so take a quick stop out here in FTSE Russell land, see what's going on in small caps. About 30,000 contracts on the tape in FTSE Russell right now. So you're talking about 100,000 in NASDAQ, about a third of that in the FTSE Russell this week in small caps. Small caps actually net up on the week, a whopping 19 and a half handles, or right about 1%. We're still just ever so briefly back north of the 2,000 level, 2010. As we're kicking off the show right now. And again, it's an equity, so over a third of that paper is going out in a few minutes out here. And as we're at these levels, actually, even though, like I said, fully a third of that paper, where we're going to hang out a little bit farther out. We're going to go out to the May week 3 contract that has 36 days to go. That has about 27% of the paper. So it actually is the most active contract this week. The vol out there, 24.5, kind of unched on the week. The skew last week, the puts 14.6% bid. This week, 15.3% bid. The calls last week, 12.2% cheap. This week, 13.9, so almost 14% cheap. So similar story to what we're seeing in NASDAQ. In terms of action, though, again, intriguing strikes. This time it's the 1590 put leading the dance out here this week, listeners. Trading pretty actively on Tuesday and Wednesday, about 600 contracts each, and pretty much all that closing. So someone perhaps giving up the ghost on the 1590 puts. I'm looking for the commensurate roll in other months. Listen, I don't see it out here, but that is someone giving up the ghost in the week 3 May 1590 puts. That is where the most action was this week out here. You guys like your small delta calls? None of those to be found this week. It's all puts, including the 2,000 puts going away in a few minutes. Those are active all week long, 300 yesterday, 200 today. Pretty much throughout the week, they were pretty active. So, folks, trading the 2,000 puts, not exactly surprising there. That is a psychologically important level. But 1590 puts, kind of intriguing, breaking in there in the old FTSE Russell as well. As we keep on rolling, we got time for another complex here, listeners. So what do we have lighting it up out here this week? We had the NASDAQ. We hit that. We did some ags. We did some energy. We did some equities. You know what? There's also rates moving our dark sides. Let's head out there next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the rates. Let's get on out to that drop down. Scroll it out of equities, go down 2 slots to rates. Product family is going to be U.S. rates, and we're going to scroll down. We always talk euro dollars or maybe the 10-year. And we had a chance to go too much farther out on the curve. We touched on it briefly with Todd Colvin not too long ago, but let's go back out there again because that's kind of an intriguing part of the curve right now, a little bit farther out. Let's go out to the 30-year. How much paper is the 30-year doing right now? Almost 500,000 contracts, 478,000 contracts on the tape right now. So no slouch from a volume perspective out here. And unlike the equities, a little bit refreshing, unlike the equities, most of that paper is in the June contract that has 36 days to go. That has 41% of the paper this week. Where is the 30-year right now? 140.28, off a little over about 2.1 points, or about 1.89%. On the week, listeners. Vol-wise, again, outside of some of the euro-dollar expirations, you're not seeing a ton of juice in the rates complex, and that's pretty much the case here in the 30 years. I mean, it is a 30-year contract after all. 13 3/4 is where we're hanging out, off about a quarter. So it was at about a 14 last week, at about 13 3/4 this week, coming off a little bit. Let's go out to the action and the big print this week. I said almost 500,000 contracts on the tape. The big print, 138 even puts. Remember I said listeners, we're at about a 140.25 right now coming into showtime. So the 138 even puts here, pretty active this week. 30,623 on the tape. The big dog was Tuesday, 16,300 traded on Tuesday. Most of that opening, 7,000 on Monday, closing there. 6,000 on Wednesday, closing there as well, and about 1,700 today. So a lot of paper going up this week, back and forth, opening and closing throughout the week. Followed hot on its heels, actually, by some more puts. It was the 140 puts going away in May in about 8 days. These did 24,000 contracts this week. The big day for those was today, 10,000 today, 7,000 on Tuesday, almost 7,000 on Monday as well. Again, kind of opening and closing all week long. So we kind of had a back and forth palooza here in terms of the put action this week, opening, closing, pretty much all week long. And then we drop down here to number 3. We have the 134 even puts doing, let's see, about 22,000 contracts this week. And let's see, the big day was 12,000 on Tuesday, most of that opening, followed by 5,000 on Monday, also opening, 4,000 on Wednesday, biased towards closing, and only a few hundred today. By the way, yeah, let's look at the skew really quickly. The puts last week, 2.9% bid. That's, of course, in the June contract. This week, 2.8% bid. So, again, you're not seeing a huge skew evolution in the 30-year. The calls last week, 1.3% cheap. This week, 3.3% cheap. So, coming in a little bit on the calls, kind of unched on the puts. But we're never unched about listeners. It's your feedback. So, let's get to it.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. You guys take the reins, your questions, your comments, your insights, your pearls of wisdom. Our chat thanking for the energy up. You're welcome, Option God. You asked a very timely one. We were going to hit that one anyway, but always happy to give the folks what they want. So if there's a complex you want us to talk about on the show, listeners, first off, the easiest way to get it is go join that secret club, because you'll get in there. You get bumped at the top of the list. Of course, if you send it in after the fact, we try to take care of you folks as well. But our secret club folks, we love those folks too. We love everybody out there, but secret club folks, very near and dear to our hearts here. You know what else is near and dear to our hearts? Of course, all you folks that play in our question of the week. This week we have a good one, an interesting one. We're asking you a lot of new products on the tape right now, including some we've talked about and pretty much announced on this show. So we're asking you, we've seen a lot of new products hit the options market recently. Which one really are you the most excited about? Gave you 4 choices. SVIX, this is the inverse VIX product we talked about on our Volatility Views show recently. UVIX, the double long VIX product. Again, also discussed it on our Volatility Views program recently, listeners. And then, of course, the products that Tim came on this show to pretty much announce, those were the CME Micro, Bitcoin, and ETH options. And also, another new product hitting the tape recently, we have the Nanos, the no multiplier options from CBOE. It's been interesting to see what you folks have thought out there, because early on, it seemed like the micro, Bitcoin, and ETH were going to kind of run away with it. Then we saw some love for the SVIX creeping in there. And then lately, just in the last few hours, it seems like the nanos have come on strong. We're hanging out at a tie right now, listeners, pretty much a dead heat, 28.1% each for the CME Micro, Bitcoin, and ETH options, followed by the nanos on SPX, also 28.1%. So it's literally a dead heat. And then number 2, a tie, 21.9% each for the SVIX and UVIX. So if you get in there right now, listeners, it's a dead heat. Make your voice heard. You could sway this one way or the other. You better believe the exchanges are watching this. They want to see what you folks think. So if you want to let them know what you think, at Options is the place to go to do just that. We try to pin it for you so you guys can find it. If it's not there, just scroll down a little bit. We have a lot of tweets going out through. We have a lot of shows, as you might imagine, hitting the network every day, listeners. But get on out there. A tie right now. I'm curious. We can't have this end in a tie. We got to have a winner one way or the other. Get on out there to At Options and help us choose that winner. Let's go on to this question from Alan before we wrap up here. Alan wants to know, currently gold, silver, and copper weekly options expire on Fridays. I saw that CME will start offering 2 additional expiry days for them starting on May 2nd. How will that impact my gold options? Well, at the end of the day, more options, pun intended, Alan, are always a good thing. You want more chances and more ways to evaluate the underlying. Having more expirations is going to help you do that. Now, as an old school market maker, I also see the flip side of that. Sometimes that could be a lot of quoting. Maybe if there's not a lot of paper that follows with that quoting, that could put a bit of a strain on the market makers. But gold usually does a fair amount of paper. Silver, a little bit less. Copper hasn't been the biggest options player, but it has been coming on in the past few years. So if we see commensurate, decent quoting activity to follow up these new listings, it's only a good thing for you folks out there in the retail. Again, more options, pun intended, usually translates into more choices for you folks, more ways for you guys to express your opinion on the underlying and on volatility and everything else. So barring some sort of disaster where the market makers just can't support these new expirations here, Alan, it sounds like that's going to be a good thing for you folks out there trading the metals. So we welcome new expirations. We welcome more expirations. We welcome more products, more listings. The more is generally better, especially for you folks out there in the retail side. All right, that's going to do it for this episode of TWIFO. I want to thank all of you out there who joined us live. Of course, if you're listening after the fact, if you like what you hear, all we ask that you rate and review, help the new folks continue to discover the show. That's also going to do it for our broadcast week this week. Yes, a truncated broadcast week. Don't blame me. Blame the market gods. Markets close tomorrow for the Good Friday holiday, listeners. Don't worry, we'll be back on Monday. I'll be back in the Chicago studios as well. My enjoyable little southern sojourn will have come to the end. And, of course, we'll see you next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.